I'm Rick Miller with Ultra Agent Insurance Services.
I'm Scott Barnett, Head of Advanced Planning for Ultra Agent Insurance Services.
And we're here doing this video to give you an idea of the various business entities in which you're going to find yourself working. You may have clients now, or you may be new to the business, and we want to make certain that when you go into a business, whether it's a small business, medium-sized business, or a large business, that you are somewhat aware of the type business entity it is, and potentially what type products you would be looking at for that entity. So again, whether you are a new person just starting your career, or you have been a broker for a while, if you've got current clients that you can go back to, we just want to give you an overview of business insurance and how it fits. So we're going to start by talking about the characteristics of the various business entities. And Scott is a estate planning tax lawyer, had practiced for 35 years, and now he's working with us. And I'm going to have Scott talk about these characteristics.
Thank you, Rick. The first thing to think about that most people don't really have a handle on is the business entity. This means that something has been done where the business is a separate organization, or perhaps even a separate legal entity, through which a business is conducted. The first, most simple one is the sole proprietorship. This is the individual that we see at this point in history, typically the home-based business or the consultant, who doesn't have a large operation and need for a lot of employees, but maybe they do have employees, and they are running their business out of their own checkbook, and their business results are on Schedule C of their personal income tax return, rather than having a separate organization. The main detriment of this is that if they filed a new entity with the Secretary of State and conducted their business through that entity, if they do it correctly, they become protected from liability for the liabilities of the business. They don't become personally liable for them. For example, if they have an entity and the entity rents office space and somebody slips and falls in their office, they want to make sure that that liability is only to the entity, not to their own personal financial statement. Then we have the other kinds of entities that are created by making filings with the Secretary of State. In the old days, it used to be that the Secretary of State would charter the ability of people to run a corporation. Nowadays, it's typically just filed for with the Secretary of State and put on as a matter of record. The benefits of this are, first of all, when the corporation conducts business, the liabilities of that business do not hit the liabilities do not become liabilities of the individual shareholders. Also, through the concepts of share ownership and having boards of directors and officers, the business owners can organize how they're going to conduct the business and how they're going to pay dividends and things of that nature. The next organization is the partnership. This is when two persons, which might be an individual or an entity, get together to conduct business together. The classic rules of a partnership would have each partner liable for the liabilities of the other partner created in the course of the business. That's been mitigated somewhat, but it's still a major issue if people are involved in a partnership. Then there is the limited partnership, where you have a general partner who has the general liability that we try to protect ourselves from, and then the limited partners who, if they manage things right and conduct themselves properly, will not have liability for the liabilities of the partnership business entity and enterprise. The next entity is fairly new in American history, the limited liability company. This is a classic legal entity in civil law jurisdictions like Spain and most jurisdictions in South and Central America that has become very popular in the United States in recent years. The reason for that is that you can still get the limited liability of a corporation without the issues of dual taxation that you have with a regular corporation. How do we avoid this dual taxation? We then move to the tax filings that you can make, distinguished from what you file with the Secretary of State. And in the case of a corporation, you can file with the Internal Revenue Service an S election. In S is subchapter S of the Internal Revenue Code, which provides that the taxable results of a corporation's business enterprise fall down to the individual tax returns of the shareholders. It's not something where you file an S corp with the Secretary of State. You file a corporation with the Secretary of State and then make an S election with the Internal Revenue Service. In the case of the limited liability company and the partnership, the way they're classically treated, these are non-taxable entities. You can treat them as non-taxable entities where, like in the S corp, the tax results of the business enterprise fall into the personal income tax returns of the owners of the business. Whether it's a member of a limited liability company or a limited partner or a general partner, there's the entity files a tax return that's a reporting return, but then it reports what portion of the business's tax results go to which owner to be filed in their individual income tax return. So we want to, when we're thinking about organizing an entity, or you're trying to understand the entity your prospective client is working under, you have these considerations. How are they filed with the Secretary of State? What protections do they have personally from the liabilities of the business enterprise? And as a separate but integrated thing, what tax elections have they made, and what are the tax consequences of the business enterprise? The big issue is, do they have to pay tax at the corporate level and then tax again as dividends at the shareholder level or owner level, or can they bypass a business entity level tax and take all the benefits in their own tax returns right off the bat without having to pay the double tax?
Very good. Okay. At this point, should we look at some planning issues?
Yes, I think there's a lot of planning issues for any business.